Before we get started, I just want to make a reminder to everybody that the information discussed today is not to be interpreted or construed as investment advice. Everyone's financial situation, goals, and objectives are different. Please consult investment advice.
The dirty secret is that no one's ever going to get paid back.
People have the shortest memories when it comes to investment.
We just got to get Keith into Bitcoin.
Hey, there's a bubble.
Welcome back to the Loonie Hour, episode 19. As always, joined by the three amigos. We got Rich Diaz with Acorn Macro Consulting. Hair is still looking fantastic. And we got Keith Dicker of IceCap Asset Management, who is desperate need of a haircut. Welcome back to the show, amigos. As always, just a little preface here that all we ask is that you share this episode with one friend, one family member, etc., as we continue to try to grow the Loonie Hour community. Again, appreciate the support and the feedback. But start off this week again. I'm kind of getting sick of talking about it, but because it is an important data point, we will touch on it briefly. So bear with us. Canada's CPI inflation coming in, 5.1%? Correct me if I'm wrong. 5.1%, the highest since 1991. Good year. So we got a 30-year high in CPI inflation, which is above expectations, which kind of continues to be the story, which is central bankers have been wrong. It hasn't been transitory. Inflation's been a lot stickier than people have, imagined. And, there's certainly concerns that this is going to be entrenched in people's minds, psychological buyer habits, etc. I mean, I certainly see it a lot, especially, I'm in the real estate space. And so I think we've seen, tremendous amounts of inflation and for developers, trying to get product, materials, labor, our sector in particular has been hit probably the hardest. And so, I see it day to day, but it seems obviously widespread. But we'll turn it over to the Tom Brady of macro, Rich Diaz, for the full, quick synopsis on his views and unpack the inflation print for us.
Okay, cool. Thank you. Congratulations to Matt Stafford. Anyways, and the Super Bowl champions. But anyway, okay, here we go.
Are we gonna start calling you the Matt Stafford?
No, God, no, please. I'd rather be mortified about being Tom Brady than being mortified about Tom. Anyways, okay, here we go. So let's make this really quick because I think we're all sort of bored about talking about this. So a couple points. You said 5.1. Goods inflation I thought was really interesting. So they split it in between goods and services. Goods hit 7.2. Again, another ridiculously, decades long high. Food, which we all enjoy from time to time, is now again climbing. So that's really hurting lower income people, as we know. And to remind everyone that these numbers are probably higher than the official numbers. But anyways, all right. So a couple more things and we'll bring it home. Let's then move on. Number one is shelter component, which we've been on for a long, long time now, is 39% of the core CPI basket for those of us unaware. And that is a hit 6.2 and is becoming a growing contribution. This is true also in the US, which we talked about several times. And then, so I'm a couple more points here, and then I'm going to hit you with some math, and then we'll switch gears. But the BOC core measures, so these are the preferred measures of inflation. There's loads and loads of papers on the Bank of Canada website that discuss this. So all three of them. One's a trimmed mean, one's a factor mean, and one the third one I always forget what it is. You can look them up. But these are the preferred measures of inflation that eliminate transitory factors. They're now at 20-year highs as well. So we got 4, 3, and the other one's around 2. So you guys can check them out. We'll put them up on the video. But it's just incredible the measures that the BOC themselves designed to keep an eye out for these kinds of things and to help with monetary policy. They're just ratcheting higher and higher. And then the last two things is one, core inflation tends to track producer price indexes. It doesn't always work, but it's working really, really well now. And if you look at the PPI X energy, we shouldn't be surprised if core inflation hits 6, maybe even 7, but probably at least 6. So it's 3.5 from right now. And I don't think we should be surprised if it hits 5, 5.5, 6. That's incredible kind of overshoot. And then the tiny little piece of math that I have is, shelter's 39%. If it rises to, if it rises to 3%, so if it settles rather at 3%, then the rest of the basket, the other 60%, right, has to be much, much lower than 2 for you to get that, that desired 2% CPI. Does that make sense? So if you have shelter, which is a big chunk, and that means the rest of the CPI basket has to be much, much lower than your average, right? That stated average. So I probably garbled that. But the point is that it's not transitory, and for everybody to look out for the shelter component. That's a wrap. Steve, I think I did that pretty quickly, right?
Yeah, I mean, it really is shocking that we printed trillions of dollars and suddenly have inflation. Shocking. But Keith, I don't know if you have any comments just to quickly sort of sum everything up here. Last comments, quick. Final thoughts.
Okay, very, very quick. This starts with a story. So what I love about inflation today, we're all just rounding it to a whole number. So like 5%, 6, so 7%. And you guys may not realize this, but back in the early O's, the who does the inflation numbers in the US? Is it Department of...
I think it's the Census Bureau, but I always screw that up.
Yeah, I forget which one it does. So they were actually calculating it to the second and even third decimal point.
They still do, I think.
But they were only posting it to 1. And then finally they decided, you know what, we're going to post it to 2 decimal points. And Wall Street said, yeah, this is great. This is, and everyone got excited about it. And I'm sitting there saying, geez, guys, like I don't know why that's so great. But anyway, the point is, years ago, inflation was so benign, it didn't matter that, all of the economists, in the back room, they wanted to report this number to the 2 and 3 decimal points. Like that's how cool they thought this was. Fast forward, 20 plus years later, we're just rounding it up. Pretty soon, maybe we'll go to, around the nearest 5. So that's one observation with the story. Okay. So the real quick thing is I look at it from a market perspective all the time. It's starting to play out the way I think it's going to. The bond markets they're still getting whacked almost every day here. That could be over soon. But remember, we equity markets are selling off, currencies are selling off, credit spreads are selling off. Everything is getting hit pretty hard here. So it's lined up exactly for Powell to take the fall. And the last thing would be really to have the US dollar, go ratchet up pretty higher. So that we're on the verge of maybe that happening. So what could happen if you actually look at estimates for US Federal Reserve price action or rate hikes? They're not only are they calling for rate hikes, but further out, they're calling for rate cuts. So they're sort of seeing it going like this and down again. And Rich, I think you tweeted out was it the 2-year yield that you tweeted out a couple of days ago? I saw you. It's a beautiful, beautiful chart. Thank you for sharing that. And but it really shows how messed up financial markets are. Sorry, how messed up the Fed is and other central banks with trying to align this with what's happening with the real world. But my point is, though, that a lot of these things in the markets are way ahead of central banks. And sometimes they can sort of make they may not even need to do rate cuts at the end of the day, because things could get so bad from a financial market perspective that they could come out and say, hey, we don't want to do this. And by the way, some of the people on my network, they were sharing with me that over last weekend, Yellen, she's the finance, sorry, she's the Treasury these days. Yeah, Treasury in the US, of course, FinMin everywhere else. There's a pretty big push around the world from the Treasury departments. Hey, they want more QE, not less QE. So, that's likely where we're going on the backside of this year. So anyway, that's it on the inflation side.
Yeah, no, and actually I want to touch on this to sort of take it a slightly different direction, but somewhat of the same here is... Rich, I don't know. So can you comment on obviously we got the yield curve flattening, which people are kind of arguing is okay, or is that we're getting closer and closer to that potential recession signal. I don't know how much weight you're putting on that right now, but I think that's somewhat of the argument that the Fed's almost too late kind of thing. It's like they probably should have hiked earlier. they waited too long, and now they're arguably tightening into a slowdown again. And we might disagree on that, but I'm curious kind of to hear your thoughts on that.
Yeah, so that's a really good point. We've been looking at that a lot internally, and we'll share the chart. Let me just make a note of that. We'll share the chart with people who aren't aware of this. So what is the yield curve? The yield curve is the interest rate across different maturities. So 1 month, 3 months, 6 month, 2 year, 10 year, 30 year, whatever. And there's been a lot of research, a lot of it produced by some of the very, very smart people who work at the Federal Reserve and strategists and investors over the years. And they posit that an inversion of the yield curve tends to signal or lead or predict a recession between 6 to 18 months. Now, that number will vary depending on who does the research, but more or less, when the yield curve inverts, you sort of inevitably get a recession. Now, people have argued that this has always worked. There are some people, probably a minority of them, who say it doesn't. What is an inverted yield curve? An inverted yield curve is when the 2-year interest rate, so the shorter term interest rate, is higher than the 10-year interest rate. And you say, well, why is that inverted? Because normally you have the opposite. You say the yield curve is 10 minus 2. So if your 2 is higher than your 10, you've gone below 0 and you are inverted. And when you plot that chart, which we'll definitely share, you can see that over time in the United States, let's be very specific about that. In the United States, it tends to predict or forecast or lead a recession 6 to 18 months. There's loads of research on this online. If you just Google Fed plus research plus yield curve, you'll find out shitloads of stuff on this. It's really interesting. Doesn't necessarily always work. And the other thing I think is important to note is that not all recessions were created equal. I'm on the record as saying I think 2016 was a recession. I think late 2018 was a recession. I might be the only person in the world who thinks that, but I'll go to my grave believing that. Anyways, and so what we're seeing right now is, I don't know what it is today. I haven't looked, but it's the yield curve is sort of screaming in, and there are people who are really worried about growth as a result. The other thing I want to say was, why is that important? So normally the front end of the curve is indicative. So different parts of the curve, different parts of bonds will have something called like term premiums. They'll have credit component. Is the borrower credit worthy or not? Then you'll have some kind of growth premium. There's a bunch of different things, and you'll have basis risk, et cetera, et cetera. And so in general, and Keith will definitely correct me when I screw this up, the longer end of the curve has some kind of inflation component and a growth component, as well as some kind of term premium, et cetera. And then the front end of the curve, let's just say in simple terms, is very much tied to the interest rate expectations. And so the reason the yield curve is inverting is because the market is basically does not buy the growth story, e.g. the far end of the curve is staying anchored, and the front end of the curve keeps creeping up and creeping up and creeping up. Ergo, you get an inversion. I think I nailed that.
I think that's a really good explanation.
I'll give you the explanation I would give to my mom. How's that?
To Willis, the dog.
To Willis, yeah. So I have a Bernedoodle for everyone. So part Bernese Mountain Dog poodle, and he's named after Patrick Willis, big 49ers football player years ago. Okay, so this whole thing about the yield curve stuff, if you're not in the industry, it might be a bit confusing, but just say I'm going to lend money to Steve, and I want him to pay it back to me 2 years from now. And I'm going to lend money to Rich, and Rich has to pay me back 10 years from now. Because a lot more remember the bond market works out bad things happening, because when bad things happening, increase the probability of me not getting my money back. So usually there's a higher chance of bad things happening the longer the time frame is. So with only 2 years up, I think Steve can pay me back. He's a big time realtor in Kitsilano, so he's going to pay me back. Rich, on the other hand, he has 10 years and he's hanging out in the school gym in Portugal and on all these places in London and stuff. So, a lot more bad things can happen with that 10-year loan to Rich. That's a norm. So because of that, I'm going to charge Rich a higher interest rate on the bond than I'm going to charge Steve. So I had to get compensated for taking more risk on Rich than I am on Steve. An inverted yield curve is when I'm going to charge Steve a higher interest rate on the loan and Rich a lower rate. And the reason for that is because we're entering a recession. And boy, bad things can happen. Recessions are short, guys. Like they don't usually go on too long. But for the next 1 or 2 years, all of a sudden now, I believe there's a higher probability that Steve won't be able to pay me back. So therefore, Steve, you got to pay up to get my money. Meanwhile, Rich has 10 years to work things out with his business. He get a slump in 2 years, big deal. He'll work his way through it. But that's the why yield curves will move that way. So if anyone is still with us right now, I hope you are. but Jesus, that's heavy stuff. Let's move on to something more interesting.
No, I mean, I think it's a good primer. I just wanted to say, like, because it's kind of interesting. So much of interest rates and Fed speak, central banker speak is like psychological. What I have noticed a lot, what I can tell you, this is probably the first you might hear about on the show here is what we're seeing, at least in Vancouver with my contacts in Toronto as well in the real estate space, is that we are very, very early stages. We are starting to see that pullback. And the pullback is a lot of it is actually we're seeing the psychology around buyers is actually starting to change. So, in December, January, even early parts of February, people like really had this like fear of missing out. They're like, oh my God, like prices just keep going up. I got to get in. And they're bidding up these prices to like this kind of blow off top. And now over the last week and a half, we keep hearing more and more stories, houses that would set a day to collect all the offers. And, normally we get 5, 6, 7, 8 offers. Some of them are going no offers. And so it's very early and we're starting to see that. And some of that is a lot around a shift around again, buyer psychology, which is, mortgage rates are going up. We're reading the news, and a lot of these people, I would say, to be honest, aren't overly sophisticated, but they just read, the CBC News, and CBC News says, hey, your TD bank says rates are going to go up 6 times this year. And so they're starting to read that, and you actually see, we're not going to go crazy here. We're going to hold off. We're going to wait and see. And so we're seeing more of this wait and see approach starting to emanate. So the buyer psychology of the housing market is very slowly, very early days, but it is actually starting to shift. And long story short is I think that is important because, particularly in Canada here, real estate basically drives the entire economy. And so that really filters through into what we've all been talking about in the show. And I think we're all still in the same view, is that the Bank of Canada is probably not going to have to raise rates as many times as everybody thinks they need to. Because I think a lot of this is going to take care of itself. So that's all I got. What else? We actually wanted to shift gears into Rich. Everyone's begging for Rich's updated oil thesis. Before I get into Rich's oil thesis, which I'm actually kind of curious to hear where the things are at. Last little bit on the real estate front. As you guys know, I'm fairly active in Calgary, so I keep a close eye on that housing market. And so I was chatting with a couple of large developers over there, and it's interesting enough. What's happening is so that the condo market in Calgary was like flooded. Like there's a lot of land in Calgary. Condos typically aren't a good investment because there's just a lot of land, so you can continue to expand. You can buy a single family house in the inner city for $550,000. So it's like, well, I buy a 1-bedroom condo. What's happened over the last 6 months or so is all the investors from Toronto have actually been flooding the Calgary market and snapping up all these pre-sales. Basically, you have these big wig Toronto realtors that are pre-sale people, where they basically only focus on investor base that sells pre-sales. And they're basically they were approached. A lot of them were approached by developers in Calgary. They put together a pitch deck, and they sold all of their investors in Toronto of the idea of buying in Calgary. Hey, look, you can go buy an inner city condo in Calgary, a 1-bedroom for $250,000 in cash flow. And so, interestingly enough, that's all. That Calgary market has just completely taken off from East Coast investors. And obviously, I think the Calgary market, as much as it's booming because it's cheap, some of this is oil dependent as well. And so the thesis right now, I think, is incredibly bullish. The sentiment around oil is bullish right now. And so I think that might be playing a part of it. But I'd love to hear, Rich, your thoughts in terms of how you see things shaping up here.
Yeah. So, I mean, I'm on the record as saying I'm an oil bull. I'm an energy market bull, and it's something that it's been really it's one of those things that's sort of played out how I've expected. And I think it's really something really important to talk about because we're Canadians, and I think because the oil is so important to our economy, a sizable chunk of not the people who work in it, but the amount of our current account balance, et cetera, et cetera. But I just wanted to step back and sort of just give a quick little, as the oil prices continue to ratchet up, as the energy and oil and gas sector outperformed. It was the best performing sector and one of the best performing subsectors last year. It's the best performing sector by a mile this year. And I continue to be really, really bullish. And I think it's important that, our listeners and sort of people like me who are Canadian and are investors sort of get a handle on sort of what's going on there and why I think it's just so important. So I'll quickly just nail out a couple things. And if you guys are more interested, I'm always happy to speak offline. But so I think it's also a function. I think politically, I think it's also one of those classic examples of unintended consequences with respect to politics. And when you sort of let, your ideals get in the way of, the brass tacks, the facts. So demand, I think oil. So this idea that oil consumption is going to fall, I think is just something that everyone needs to sort of get out of their head. Yes, eventually we will use less of it, but right now global oil consumption is about 100 million barrels a day. Each barrel of oil is about 159 liters. So that's per day. That consumption of oil, people forecast it falling. I think it's important to understand where that consumption comes from and who's the next sort of in line to consume it. So, and I'll make this quick. So 38% of that oil is consumed in the Asia Pacific region. So you click right off the bat, you think India, you think China with, 2-3 billion people, but then you have the Indonesias of the world, the Bangladesh, Pakistan. I mean, the population numbers with respect to their consumption is incredible. After that, you have North America, so US, and then you have with 25%, the EU with roughly 10, and then in third, well, not in third place, but Africa, which is very, very important with respect to population and is obviously very poor, but only consumes 4% of global oil. Now, you have to understand where the consumption comes is nominally, is going to come from where the population growth is and where people are accelerating into sort of new strata of economic, potential GDP per output and et cetera. And to the point is oil is a freaking miracle. It's an engineering and scientific miracle. It has extremely high energy density. It's relatively cheap to extract. We know exactly where it is. It's accessible. And so when people say that global oil consumption is going to, just stall out at 120 million, 105, 110 million barrels a day, again, a day, it's incredible the amount of energy that we consume. And it's important to know that continents like Africa that have hundreds and hundreds of millions of people who are just starting to consume, fridges, cars, so much of that is energy. And guess what? Africa has a lot of it. So they produce about twice as much as what they consume. And I think it's important to, it's cheap, it's accessible, and they have it. And so this idea that we should be, I don't want to get into the moralistic argument about energy and telling poor people that they should not consume cheap and accessible energy. But I think it's important to understand where the demand is coming from, where it's likely going to go. And the top headline message is that global oil consumption is not going anywhere. Add to that the fact that everyone's mothballing their nuclear power plants, which is a conversation for a different day. The idea that you're going to replace the literally trillions of terajoules of energy consumed per year with a bunch of solar panels, which by the way take lots of carbon and high energy to build, and wind farms, again, same. It's just not going to happen. I think there's this, frankly, a lie that's been told over and over, and I think we just need to move past it. And then on the supply thing, which I'll make a bit shorter, which is really, really why I'm so bullish on this sector, is short-term inventories are super low. So I've shared this chart on Twitter. We won't share it on this space because it's just sort of too esoteric, but inventories are back down to sort of the average that we've seen for a long time. They were quite high and they're down. Why are they down? Because in their infinite wisdom, countries have been, climate change is important and must be taken seriously, but unless supply, so all the policies have basically been centered on supply. And what do I mean by that? They've prepped people like Mark Carney, who, anyways, I won't say, if you can't say anything nice about, don't say anything at all, has basically spent lots of his effort and time trying to squeeze out the funding, increasing the cost of capital for these oil companies to produce oil. And so what you're seeing is these companies are getting squeezed out of the capital markets. It's more and more, that's the goal. And so what does that mean? It means it's more and more expensive to take on new projects, and they're more reticent to take on projects that may be risky and might have, lots of reserves. So what does this mean? It means that CapEx, so capital expenditure, and the search for and basically getting access to reserves has collapsed. So how do you measure that? CapEx relative to sales, CapEx relative to total assets for publicly traded companies is basically at a 25-year low. And other things that you would measure supply are things like rig counts. So what's a rig? Literally an oil rig. There's offshore rigs, onshore rigs. There's natural gas rigs. And then you could say, Richard, we're more efficient per rig. We can produce more. Fine, but they're still, again, they're on the floor. And the other thing that seems really important is the OPEC spare capacity argument, I think, is also sort of false. Yes, OPEC has lots. What's OPEC? Is the Organization of Petroleum Exporting Countries, OPEC. And they control about 35-40% of the global oil supply. And, there's all this talk about them increasing their quota. It's a cartel, and it's a cartel of countries. And they get organized in order to try their best to control the price of oil, to extract the most amount of money from the global economy as they can. The trick is, over the last 20 years, their power has obviously fallen as the US has become a much larger producer of oil. And there's always this bearish argument on oil saying, well, OPEC can always just increase capacity. But the thing is that the same companies that have been, squeezed out of the capital markets with respect to funding CapEx, a lot of them, they do it in these countries. So Royal Dutch Shell, for example, has lots of business interest in these OPEC countries. So what we're seeing, so basically the upshot is you have a situation where demand, in my view, is not going anywhere, is at best going to remain flat at best for the next 5, 10, who knows years. And a situation where a lot of the climate change policies and, frankly, the fact that these companies have been getting absolutely trounced in the markets over the last several years, the divestitures, a lot of the stuff has basically reduced the supply, A, in the short term, and B, has reduced the ability to meet the new demand. E.g., there's the number of new reserves coming on board is coming up. So for me, that's the reason I'm so obsessed with this topic, is because oil is by far and away the most important commodity that human beings rely on every single day. I'm interested in the truth and making money. And when those two things collide, I love it. And I think it's really important as Canadians, before we, turn around and say, we should just shut down all of our oil industry. And I think we should be very, very, very careful about doing things like that. And I think that's now the question, we're going to get into Russia in a second. In the short term, is war bad for oil demand? Keith will let us know when we shift gears. But yeah, there's my oil rant. Hopefully you guys learned something. Any questions from the class?
Yeah, before we get to Keith's commentary, I'm going to try to dumb this down and summarize everything Rich basically said, which is essentially oil and energy is life.
Thank you. That's exactly a really good way of putting it.
Energy is life, and energy is productivity. In order to be a more productive society, you need to consume more energy. And basically, we're at a situation today where the renewable sector isn't able to replace oil. And so in order to be more productive, we're going to end up having to require and be more reliant on oil, at least in the near term. And I think it's a particularly precarious situation because if you look at it, global debt to GDP, for example, is 365%. The global economy has never been sort of more over levered. In order to sort of bring down that denominator from 365 to say whatever 300%, you essentially need to try to grow your way to lower that ratio. And one way to lower that is obviously to have higher productivity, which again is going to rely on more energy. I don't think we're necessarily going to get more productivity. So what they'll probably policymakers will opt to do is basically hit Control P and just basically try to print productivity through central bank balance sheets. So that's hopefully recaps everything Rich said, because I think that was really a good masterclass. Keith, I kind of want to get your thoughts. If you have any additional commentary on what Rich or I just said, and then of course pivoting to Russia, Ukraine, and some of the geopolitics on that front.
Yeah, Rich hit a pretty good home run. You hit it pretty well there, Rich. Just some things to add to it. Again, for everyone to understand two things: climate change policies are being adopted by the Western world, and that's what the main driving course is happening here. So we'll talk a little bit about that. The other thing is what people don't understand is all of like shipping and transportation around the world. It runs on oil. It needs energy to move. So you can't simply, people talk about cars becoming electric, and that's another thing. They got to get their electricity off the grid, which most times is coming from oil or coal anyway. The alternative, like wind and hydro, it is increasing, but it's still quite small relative to everything else. But like all these shipping containers that are moving around the world, like they're not being powered by wind or hydroelectrical. Like they need oil to do that. And then of course we have natural gas. Of course, you can push that in pipelines if you're allowed to build a pipeline. Those that are allowed to build a pipeline, if you want to ship it across water, you have to liquefy it. So you have LNG, liquefied natural gas. And when they put that gas on a ship, guess what's going to power the ship?
Wind?
No. So, and again, with airplane, like, it go back to what Rich was saying. So and the other thing to share with everyone, like, so for example, here in Canada, so our Minister of Natural Resources, guess what his job was before?
Climbing towers.
Peanut salesman.
Yeah, absolutely. He was the minister for I don't know what the department, but climate policy, basically. So he's very much on the green side. So that's
he was
why
climbing. For everybody that doesn't know, he climbed the CN Tower in protest for it was an anti-oil thing. He climbed the CN Tower and literally was arrested. Like,
he was a Greenpeace activist. He was He was big in Greenpeace, and
Okay. So I mean, it's fine to share your views on stuff, right? That's sometimes it's unacceptable, but sometimes it is acceptable. But the point is, though, for Canada, there were some pretty big policy headwinds against the Canadian energy sector. There will be opportunities. I believe strongly in this theme called abandoned assets. I mean, that's out there as well. But from a global perspective, from my view, is that if you're really bullish on oil, Canada may not be the place to play that if you're doing it from, say, an equity market perspective. But Rich hit on all the key points there. One other thing to share with you, how complicated the energy complex is. So this is anecdotal, and you take it for what it is. It's my understanding that one or two board members of Exxon were appointed by BlackRock, because BlackRock is, they host most of the shares through their funds that they're managing, and they're really big on ESG these days. That's the direction they're gone, and whether you like it or not, it is what it is. So they're specifically put on the Exxon board. So, the biggest publicly traded oil company in the world, energy company in the world, to get these guys to stop producing oil and everything, basically. And what Exxon did, and again, this is what I'm hearing for some guys I know, they said, okay, this is not a bad thing. We're going to train these two new board members or educate them on what's really happening and how important it is, oil is to the economy, to our social system, political system, financial system, and so forth. And what happened is gradually these two new board members, they're coming on side. Now they're starting to appreciate that you just simply can't cut off oil and, let's start producing alternative energy. Again, it's extremely difficult. As Rich said, with global demand, at worst, it stays flat. I mean, I think all the fundamental factors are very strong for oil. From a financial market perspective, we're going to get ebbs and flows here. And so that's where I'm excited about. We can still have a super spike coming in oil. And I don't think it's going to be that super. But again, you really have to distinguish between the economic and policy side and the long-term factors that are going to drive the price of oil with the short-term financial markets, because things can get out of whack pretty quickly. And so this buy and hold strategy with oil, I don't think you're going to get some great opportunities to sell what you have and better opportunities to load up again. But a lot of the models that we look at right now, crude oil might have a bit more upside to it, but you might get a really great opportunity to add even, to reload, to add even more to it. So that's all what I have there on the sector. Again, incredible long-term opportunity.
Can I round this out and just make my last 2 points that I think are really important? Number one, climate change is a serious thing, and hopefully human beings will come to terms with the real way of dealing with that, nuclear power. But the climate rhetoric obfuscates what a marvel of engineering and science the exploitation of fossil fuels really is, and how cheap energy has been vital in emancipating the world's poor. And that is something I want to drill into everyone, whether you're listening to this or not. And I think that, and the other thing that I think that's really, really important is, and it's a Pyrrhic victory with respect to the financial markets. It's a Pyrrhic victory. What's a Pyrrhic victory? I think he was a Greek general. Basically, he won the battle. He won the war, but every single one of his soldiers was killed. I can't remember his real name, but it's something term called a Pyrrhic victory. And, unless both supply and demand change in tandem, all this climate policy is going to have the perverse effect of making large oil companies even more attractive, notwithstanding the near-term fluctuations. And that's the two main takeaways I want. That's really what I've been that's what I've been itching to share with you guys. And so thank you for giving me the opportunity to do so.
Yeah. I mean, I think that's a good point. And obviously, Canada's the third largest.
Third or fourth. No, it's the fourth largest. So you got U.S., Saudi Arabia, Russia, and Canada.
So speaking of Russia and oil and whatnot, Keith, I don't know if you want to give everyone, because even when the CBC News starts reporting it, it's clearly important. Russia, Ukraine, this kind of standoff. Can you kind of dumb this whole? You could dumb down this whole situation for us, geopolitics, et cetera, for everyone that's kind of paying attention, doesn't really know what's going on, and obviously what this might. First of all, dumb it down for us, and then second of all, how you're looking at this from like a financial markets perspective.
Yeah, sure thing. So I just find it's an incredibly interesting narrative, what's happening. And geopolitics is always a narrative. It's never black or white or 1 + 1, it's 2. There's so many crazy things. I mean, just a few years ago, I think the Americans were supporting, at the same time, they're supporting ISIS as well as the fighters that were fighting against ISIS, just to give you an example of how wacky things can be. So I'd like to conclude first. Okay, so first of all, with the Ukraine, you don't need to worry about war happening. It's basically President Biden in the US, he's incredibly weak right now domestically. And what's happening in Ukraine and being megaphoned by the mainstream media, it's really a great way for the White House to create a distraction from a lot of the negative things that are happening domestically. And you're going to get, the classic, whenever there's a global crisis, you get the real late night video. I mean, I think Obama has done it, Bush has done it, Clinton has done it, and everyone else, like 2 or 3 in the morning, and they got bloodshot eyes, and they solve. It's never solved at 1 in the afternoon. It's always like late night in America when it happens. But something will shift here soon enough that would allow the Biden camp to take credit or victory for de-escalating the situation over in Ukraine. Now I'll get into that, what it is. And as soon as that happens, the media they'll swoon over this. So, the CNNs and those guys, like, they'll be all over this. But understand what's happening here. This always happens. So why Ukraine? People say, what the heck is Ukraine? Do you guys remember the Seinfeld show years ago? Do you guys watch that? Maybe not. You guys were too young. You couldn't stay up that late, right, to watch it when it was on?
No soup for you.
So it's one famous episode. Kramer is playing Risk, and he and Newman, they're traveling around the city, New York. And at one point, they're on the subway plane, and all Newman has left is Ukraine. And Kramer has the whole board with his army on it. And Kramer says, all you have is Ukraine. Ukraine is weak. And like, obviously, it's this Ukrainian guy standing next to him, like obviously wearing the fur hat and the long olive pleat coat or something. And he slams on the table. Ukraine is not weak. Okay, so let's just talk about Ukraine, whether Ukraine is weak or people would like it or not. But that's your boomer story for today. So Ukraine, for everyone, you have to understand where it is geographically. You have to understand that this sense of history and economic. Say from an economic perspective, man, Ukraine's important. So if you look at, it's the #1 producer for sunflower seeds in the world. And then in terms of world rankings for corn, barley, rapeseed, wheat, and soybeans, it's like 6th, 7th, or 9th in the world. So it's literally the breadbasket, for over in Europe and Asia. It's incredibly important what they have there. So it's always important for the Russians to have access to these, even though the Russians produce a lot of the same stuff at the same time. You also have to think about years ago when Stalin was in power, when the communists were in Russia. Just horrible stories, but Stalin marched into Ukraine and basically stole all the wheat, and manufactured a pretty severe drought there, where many people died as a result of that. So just research Stalin's. They call it Stalin's gold. So it's again like interesting stories. There's actually a movie out now. I think it's called Mr. Jones. It just came out a couple of years ago, but it sort of touches on that aspect as well, how important Ukraine is, to the Russians. From a geographic perspective, Russia has basically 3 major seaports. So they're up in the Arctic, and it gets kind of cold in the Arctic, and it's expensive with the icebreakers to do stuff. Then you have another one way the hell over on their east coast, over in Asia, over in the Pacific. And that's not that effective either sometimes. And then they have access to the Black Sea, I think it is, Rich?
Yeah,
and
Black Sea.
So warm water ports.
And the Sea of Azov, I think is how you say it.
My pronunciations are not very good.
Sorry.
A lot of things. So yeah, but that's correct. So having access to the warm water seaports, is such an incredibly important tool or strategic tool for the Russians to have. With Ukraine as well, I'm going to make up the number, but probably 25% of it to a third, it is Russian. So on the eastern part of the country, it's just from when Stalin went in years ago and supplanted they put Russians down there to grow stuff. So the Russian heritage and language, it's already there anyway on that part of the country. The rest of the country, they're Ukraine, different language completely. They have a dislike for the Russians and so forth. Okay, so we have all that lined up. Why are the Russians ticked off right now? Because the Americans, through NATO, they're threatening to take Ukraine within NATO or to become friends, and they want to set up shop in Ukraine. So this is similar to the 60s. So when the Soviets wanted to put missiles over in Cuba, the Americans got pretty ticked off about that and said, hey, no way, this ain't going to fly. So it's sort of analogous to that. You also have Europe is involved, and Europe is they're in a real tough position here right now, guys. So the Europeans have no military really to speak of. They are reliant upon NATO, which is the Americans, for any major protection. And they're not even getting a seat at the table in any of these discussions. So Macron in the US, he actually went to Moscow by himself. And you guys probably saw the big long table that they had set up, that's just Putin just messing with these guys, right? Like, these guys are playing checkers, and Putin's playing chess, of course. But so again, the Americans, they want to, let's keep the Russians, on edge here. Why do they want to keep the Russians on edge? Why is everyone worried about Ukraine all of a sudden? So there's always there's a theory out there called the World Island. So it's written by a guy. It's a book. I think it's William McKinley or something like that. I remember a few years back. And he describes the combination of Asia and Europe as one big, enormous island around the world. And from an American perspective, you never want one country ruling that enormous island. You always want multiple countries or individuals disagreeing with each other. You keep the fight over there all the time. So you have the Russians are there. The Europeans are pretty weak, really, when you think of it from that side. And then you have the Chinese coming in. So, for example, when the Americans just left Afghanistan there recently, whether it was right or wrong, you'd agree or disagree with everything. But the moment they left, there's a vacuum there. And guess who filled it immediately? The Chinese, right? So the Chinese come in. Do the Russians like that? No, not at all. Not at all. So again, every point from a geopolitical perspective is to keep everyone a little bit off balanced. No one ever is allowed or permitted to get an easy, land grab, so they can take power. Now, I just want to sort of, reduce any stress everyone has about bombs being dropped and everything. So I was chatting with one of my friends he lives this stuff all the time. He shared with me that the Russian military, he said, it's too small, it's underfunded. Moscow is not able to reach any global hotspot. So that's not going to happen. So they can reach places within, basically, air quote, on a drive away from Moscow. But, the Russians aren't ending up in Asia or South America or Africa or anything like that. They're
Berlin.
in Berlin, right? So they have that. It's not this strong military that everyone is led to believe, through the Hollywood movies. So for the Russians to properly invade Ukraine, they need elite forces. And the majority of their elite forces right now, they have 75 planes that can carry, I think it's 3 planes, can carry 1 battalion. So they have about 25 battalions of elite forces, and they're in Kazakhstan right now. And none of those planes have left Kazakhstan. So all this media hype about, hey, the Russians, they're going to invade imminently. What I'm hearing, again, from my network, they follow this stuff, if the Russians want to invade, they would, they might have success for 48 hours, and then they're going to get plucked off. Like, it just becomes a complete domestic disaster from the Russian perspective. And does Putin want a domestic disaster? No, he doesn't need that at all. He just needs to look strong domestically against the outside forces. Biden needs to look strong domestically versus the outside forces, and same with the French and the Germans and so forth. So I suspect this is going to blow over. The likelihood, oh, by the way, I'll throw this out for Rich. Rich is going to drop his jaw, and I want to tell you this one. I've also heard that there's a pretty big entity out there that can print money that's been buying oil to drive it up as well. So the probability of oil coming off, as soon as this stress is, or the situation is de-stressed, all this can work together here. So the bottom line is, don't get too worked up over this. Another good friend of mine as well, he's really in the energy markets. He has all these different, commandments that he'll follow. And, I think number 4 on his list, he'll tell you, he said, Keith, like during any increased risk of war, he said, that's when you sell oil. You're not buying oil at that point. You're buying at another time. But anyway, I hope that sort of simplified what's happening over there a little bit, maybe, Steve and Rich.
Long story short, it sounds like it's just a lot of like political grandstanding that both counterparts are basically just trying to look strong politically. I mean, I get Biden, obviously, low and falling approval ratings as a distraction. And is it your view that like Putin's sort of the same thing? Like this is just kind of political grandstanding to look good domestically for him, or is there like a genuine intent to actually move on Ukraine?
No, I mean, they would, I think, effectively they already controlled Eastern Ukraine anyway. Because remember, Eastern Ukraine is already Russian. That's just the way it's set up. And people must say, no, it's not. But from a language perspective, cultural perspective, you see that as well, Rich? I mean, that's what.
Yeah, absolutely. No, there's loads of maps with respect to both ethnically Russian as well as simply the language, and the language is very, very important. And also like places like Odessa, which is one of the largest cities. Kiev, like Odessa is like 60% or whatever it is. Half the people there are Russian. Kiev, I'm looking at the chart right now, it's like 25% Russian. I mean, there's loads of, it's a weird place, right? Historically, the Ukrainians hate the Russians, but there's loads of Russians who live there. And then Ukraine was part of Russia for a long, long time. It's messy. It's messy.
So what would you say, Keith, like is your ultimate like takeaway if you're just kind of saying this to the average Canadian, be like, hey, here's what this kind of means to you? Like, I feel like a lot of Canadians, at least what I gather after that, long but educational spiel, is kind of like, okay, so this doesn't really impact me.
Yeah, absolutely. I mean, there are a lot of reasons to be worried about things around the world. I wouldn't be worried about Ukraine. I mean, hopefully I'm not wrong on this, but again, like probabilities are never 0, 100% and everything, but you heard me before say the probability of this happening is quite high now. The probability of Ukraine, just escalating to this insane, crazy moment, it's not as high as what you're hearing in the media and stuff like that.
So can I give some color just as to, I think there's two things that I think deserve some color. One, people may or may not know about NATO is NATO has this Article 5 thing, which is if you're part of NATO and one of the nations in NATO gets attacked. So countries in NATO are Canada, there's a bunch of them, but the big ones are Canada, UK, France, Spain, Germany, Turkey's part of NATO. If any of these countries are attacked by a foreign aggressor, there's something called an Article 5 gets triggered, and it's effectively you're attacking any and all other countries in NATO. So that's, if you're not aware of that, that's a little bit of a detail that I think is worth noting. The other thing that I think, why is Biden under pressure for Canadians who don't necessarily pay attention too much to American politics? I've written down sort of 4 or 3.5 things that I think are really important. The mask mandate for kids, mask and mandates, like it or lump it. That's what's happening. There's something called critical race theory, which is absolutely not the place to be talking about that, but it's just, that's real. As someone who pays a lot of attention to American politics, I can guarantee you that's something that's going to affect the midterms. And of course, the thing that we are bored of talking about here is the same in America, which is inflation, which is even higher there. So going into the midterms, Biden is basically going to get absolutely creamed and I agree with Keith with respect. So that was the other thing. And then finally, Keith, on the Ukraine side, which you didn't mention, which is the Ukrainian military has massively, massively increased in the last 7 or 8 years since Russia annexed Crimea, which is the tiny little peninsula in the Black Sea, which is one of the only deep water, warm weather ports. But since that happened in 2014, Ukraine's military strength is trebled in personnel size, and they have things like Javelin anti-tank missiles and all this crap that basically countries that want to destabilize that region have basically handed them over. So there you go. That's my piece. I don't know, Keith.
So I'll yeah.
But just one thing, sorry, Rich. Just one thing to add here. I mean, think about this from a everything's about power in the world. That's what it's about. Not for the Loonie Hour, of course, but it's, we're doing other cool things. But from the American political perspective, just imagine for a moment, Biden can all of a sudden resolve the Ukrainian crisis and the inflation crisis at the same time. Oil comes plummeting down. The bad Russians are defeated just in the nick of time, for the all the campaigning to start. So it's that's what I see coming on. I have a visitor here. Do you guys want to see my visitor?
Is it Willis?
Yeah.
He's harassing Keith. Oh, he's huge.
Jeez, the thing is bigger than Keith.
So this is Willis. Yeah,
that is a big boy.
Yeah, everyone loves Willis, right?
Yeah, Willis likes his Twinkies too. So I mean, I guess, ultimately, just to kind of wrap things up here, we're approaching the Loonie Hour. But yeah, a lot of politics being played out really across the globe. I think looking for distractions. I think Canada, homegrown here, we certainly have a lot of distractions going on ourselves. The trucker protests. I think what we can see with the Trudeau government. Obviously shutting down. Now freezing bank accounts. If your political views don't quite align. Certainly a bit of a slippery slope. We're not necessarily going to get into that today.
I do have a quick comment on that, by the way. Sorry to interrupt you. So I'm in a couple, these WhatsApp groups the younger kids use. And, one of them is a lot of European-based and American-based traders. And they're all like this morning, 4 or 5 of them have reached out to me and say, hey, what's going on in Canada? So in Canada, if there is or isn't a lot of concern with what happened from the announcement out of Ottawa a couple of days ago, we're like, hey, blow it off, no big deal. Foreign investors do consider it a big deal. So if all of a sudden, again, say you're thinking about investing 200 million capital to build a new building or facility to do this or that, and all of a sudden you think, holy smokes, if the government wanted to, they could immediately come in and shut it down or cut off our bank account, stuff like that. And again, it's irrelevant whether you say, hey, that's a great point or it's stupid. Foreign investors are now talking about that this week. So and I always tell everyone, you always have to view your own country the way that people from outside the country are going to view it. And so this was not a positive policy move by Ottawa this week. It may have made a lot of different groups domestically happy, but outside of Canada, it was not a winner, like not at all. So that's the thing I wanted to comment on that. Yeah,
I mean, I think that's a good point. I think politically, it seems like there's a lot of pressure. I think there's a lot of friction, a lot of divide. I think approval ratings on the Trudeau side, obviously, again, probably similar to the Biden side. Whether you like them, dislike them, doesn't really matter. But I think it's pretty evident, and I think this is a lot of politics playing out here. Again, anytime in Canada you get again a 30-year inflation print, home prices are going through the roof. Up 20. Nationally, we didn't talk about, but the latest data came out, up 28% year over year on a national basis. That's an all-time record high, growing at 3% per month. It's not a good situation here. And obviously, seeing more of these policies, it seems like things are kind of unraveling here. So hopefully we can get our shit together, pardon my French, but and
the other thing that I think is the other thing that should frustrate Canadians, like whether or not you think those truckers should go home or not, to me becomes less relevant. I got to throw this in there. The amount of money that is laundered in Canada to buy real estate that Steve may or may not be selling to these people, and the amount of money that's run out of British Columbia that's selling fentanyl, and the money laundering that's related to that, and the thousands of people that have died from fentanyl overdoses, that is directly related to the money laundering. And the fact that basically zero has been done with respect to financial crimes. In fact, financial crime units have been mothballed in British Columbia. These are federally mandated RCMP. This idea that that they're after, it's even if you think that all these truckers should go home right now, you must recognize how cynical this financial crimes angle is. And frankly, I think we should, as Canadians, should demand better, whether it's a RICO Act in the United States or an IRS equivalent with teeth. that to me is just, that's my 2 cents on that. It's not okay. It's not okay to only attack your political opponents, right or wrong. Again, right or wrong. Just let's do something about financial crimes. That's my last bit on that.
No, I mean, I think you hit the nail on the head here. But I mean, I think it's a good way to wrap it up. We'll obviously be monitoring these geopolitical events and how they pertain to, you know, everyday Canadians' lives. That's what the show is all about, right? It's just kind of, you know, having an extensive dialogue on what this means for the everyday person and ultimately how to protect your, you know, your hardworking capital, because that's what the show is all about. So as always, we appreciate the support. Again, if you can share this episode with at least one friend, just to continue to grow the community, we always appreciate your love and support. And as always, we'll see you next week.